Options activity spiked in early April around the White House tariff announcement. Joining us now with a look at the options market and what it's telling us about the August deadline is Carley Garner, futures and options broker at DeCarley Trading. Carley, great to have you with us. What's interesting is if you take a look at a chart of the VIX, you can see it really spike around Liberation Day, and now it's below pre-Liberation Day levels with the markets at record highs, even with this tariff deadline looming. So what does that tell you?
It is. I mean, obviously the market is, the VIX is basically sitting roughly where we came into the year. And if you ask me, we're in a completely different environment than we were in January. I mean, in addition to the tariffs and all the chaos that we saw in April, if you would have told me that the U.S. would be dropping bombs on Iranian nuclear facilities in 2024, I would never have imagined the market being where it is today. So I think, in my opinion, the market's underpricing a lot of risk, not only risk from Washington, D.C., but risk of deleveraging in the system. One thing that we've learned in 2025 is not that, what surprise is lurking around the corner, but we know there is a surprise lurking around the corner. We need to be prepared for it. And I don't think the market is prepared going into, Liberation Day 2.0 and everything else that comes with the seasonality that generally the equity market weakens in late July and early August. So in hindsight, probably wasn't the best timing as far as the Liberation Day 2.0 deadline, but, we'll have to see what happens.
Right. And I would imagine, as somebody who trades in traffics and options, that it's a great time to get some protection with the markets sitting at record highs, closing highs, and the VIX so low. How far out do you go to protect, and what sort of strategy are you looking for in terms of levels?
Thank you for asking that. We're basically in the risk management business. And when I look at the S&P chart, I see maybe, I think we're probably headed to about 6,500. But when I look at the downside risk, I'm seeing numbers like 5,500 and much lower. So there's a lot less upside potential than downside risk. So what we're recommending to our clients is to put together a strategy. It's called a risk reversal. And the idea is, if you own the underlying stock, let's say you own roughly 300,000 worth of S&P 500 allocated stock, you can put together a strategy where you sell a call option. This week, we've been selling 6,800 calls in December. And then we use the money that we're picking up from that sale to purchase put options. So we're basically using the market's money to buy our portfolio insurance. The downside of that is, if the market goes above 6,800, our gains are capped. But I think all of us could agree, if we are, if our profit potential is up to 6,800 before expiration in December, I think we can live with that.
And you probably roll it out. I mean, right? I mean, at that point, you'd either roll it out or you'd be happy to be called away at 6,800. I'm curious, though, Carley,
Absolutely.
You actually see the market has high potential of hitting 65.
I think there's a good chance we see 65, and this is just charting. Markets have this weird, uncanny ability to touch trend lines, and that's the monthly trend line. It's a multi-year trend line. So I would suspect we probably see that. Although I will say, in April, we started selling off in February, March. We were a little short of hitting that trend line. So maybe we fall short again. I don't know. Who knows? I can't see the future, but what I do know is there's a lot more risk than reward at this point. So I think it's a good time. Anybody that was stressed out in April, I heard a lot of people questioning whether they can retire on time and, how they're going to survive the financial calamity that they've experienced over a couple of weeks. If you were in that ballpark, you probably are over allocated to stocks. You're probably carrying too much risk for your age group. Right. And this is a really good time to reassess. We've got a mulligan, and I think it's a good time to do something about it.